Hey guys, what's up? In this video, I want to show you exactly how you can make an extra $1,000 every single month trading SPY options. I'm going to show you the most reliable and most consistent strategies that work in today's market and will continue to work moving forward because they're based on principles that are proven, historical, and based on human psychology. So let's dive into it today right here. Okay, so first off, we need to talk about the strategy we'll be using, which is called an options credit spread strategy. So the way this strategy works is simply you're placing a bet on the stock. Let's say the stock is trading here. Okay, your bet is that the stock stays above this level. Why? Well, it looks like the stock is moving higher. So as long as the stock stays above this level in the next week, you make money, which means if the stock goes down, you make money as long as it stays above the level. If the stock goes sideways, you make money. If the stock goes up, you make money. That's what a credit spread bet is. Now, when you're putting on a put credit spread, that means you make money in general when the market's bullish. Why? Because the stock's trading here. You pick a level below it, you think the stock will stay above. As long as the stock stays above it, no matter what it does, you make money. So a put credit spread is a bullish type of market, or you think it's more bullish than bearish. Call is the opposite side of that, meaning that if the stock's trading here, you think the stock is going to stay below a certain level. So as long as the stock stays below this level by the end of your expiration date, you make money. So a call is more for a bearish type of environment. So bearish. So again, these are the only two types of things you need to know. If you want to learn specifically how to place the credit spread trades in your specific brokers, I have videos for that on my channel. But today we're getting in deep into the strategy, not exactly how to place them on a broker. So that is what we're doing. We're trading put credit spreads and call credit spreads. Let's dive into this. All right, let me remove this little thing right here. Okay, so like I said, when we're trading put or calls, we just need to know the general direction. How do we know the general direction of something? Well, quite easily, we come here, we add a moving average to our chart, just like that, moving average. We adjust what we want the period to be. Again, this is one that I seem to like. Oops, let's see, moving average right here. Settings, moving average, okay, right here. 50 seems to be a nice one. Okay, so what we see here is that if the 50 moving average line, the 50 period moving average line is pointed down, we are more bearish than bullish. If the line is pointing up, we can see here moving up, then we are more bearish or more bullish than bearish. My bad. So pointing up, bullish, not bearish. Pointing down, bearish, not bullish. So what do we do? Well, right now the market is pointing up. So what are we? We are bullish. So we're going to put on a put credit spread. So put credit spread means we're going to try to find a level we think the stock will stay above. Okay, so next step is this. We're going to simply look what level can we put it at. Well, we're going to in general look at a support level. 425 right here as a solid support level. Not only that, we can come here and we can go inside of this chart and click on Fibonacci retracement. We find the previous low where it bounced at. You can see it bounced here. Trace up to here. Oops, I did it in reverse order. Let's get rid of this and redo it. We're going to trace from the bottom to the previous top, just like that. And now we can see where our next level is. Our next level is right here at 430. So that means we want to place a credit spread around 430. So we're going to be selling the 430 and buying the 429. And that's how we're going to set up our credit spread trade, our put credit spread. We're going to go to the options chain. We're going to put on sell the 430 and buy the 429. Because the market is trending up, this will go in our favor. Now again, it doesn't necessarily matter where you put your strike price. The further you go out, the higher of a win rate you'll have, but the less credit you'll collect, which means the less money you'll make. But again, if you come in here and get closer, you'll make more money, but your win rate will be lower. The important part of this strategy is trade with the trend. Understand which way the moving average is moving and trade with that move. Now again, when you're trading put credit spreads, because they make money to the upside, on red days are the best days to enter. Why? Because credit and premium are higher. You can get in, collect more money, and even go out further, so you actually have a higher win rate as well. So what do you need to do to actually put on this trade and make $1,000 a month? Okay, so what is $1,000 a month? Let's break this down so you can understand what you need to hit and what account size you need. So $1,000 a month is going to be this. Divided by 4 weeks, right? We have 4 weeks in a month. So that's going to be a target of $250 for every single week. Okay, cool. Let's say we can take 2 trades a week. Okay, I'm actually gonna try to. I can't even make this into easy math. I should have done that. Whatever. Let's say 2 trades a week. that means we need to make, let me pull out my handy dandy little calculator here, 250 divided by 2, 125. I wish I totally should be able to do that math. My bad. 125 right here. $125 per trade is the goal per trade. Okay, cool. If we are putting, if we want to make $125 per trade, let's say on average we're collecting roughly $20 per trade, so 20 cents in credit, so $20 per trade. The way that we're going to do this is this shows us how many contracts we need. So if we're going to put on $125, how many contracts do we need? Well, divide that by, we make roughly $20 per contract or per spread we enter. So let me see, I hope this doesn't come out to a whole number because then I'll look stupid again. 6.25. So let's round up to 7. So we're going to need to enter 7 contracts per trade, or 7 spreads per trade. So 7 contracts per trade. So again, if you're trading 7 contracts per trade, again, what account size do you need? Well, if you're trading 7 contracts, and that means we need to put up a collateral of $100 for every contract. That means we need to put up $700 to enter this trade. We need $700 of collateral to make $20. Again, your risk to reward is not in most typically in your favor, but because you have a super high win rate, roughly in the 85 to 90% win rate, this is why it's set up that way. So okay, so $700 to make roughly $25. Okay, cool. So we have that. Now the question is, 7 contracts, 100. We can place this trade with $700, but how much should we have for proper risk management? Well, again, if we only want to put in 10% into every trade just to have proper risk management, then we'll divide the 700 by 0.10, and that will give us $7,000. So to be safe, you should have $7,000 in your trading account to make $1,000 a month. Again, this does not factor in losses. Some months you'll have losses and it'll be a bit greater, but on average, you can make $1,000 a month by trading with $7,000. So again, guys, this is the beauty of credit spreads when you trade the right system. Now, you may be like, Austin, I want more specifics. What are the details? How do I place these trades? What are the rules of this strategy and how can I do it? Well, I have an Inner Circle Credit Spreads trading program that's actually opening up tomorrow. Again, I only open this Inner Circle program for 4 days of the month because I spend all the rest of the days of the month not marketing it, but spending time with my members, ensuring they make money. But anyways, if you want my free trading guide, click down below and you can check out the exact strategies. For instance, we were talking about a true total strategy. You can walk you through exactly the entry rules you need, what you need to look for to enter these trades, the back test, and so much more. Just following this strategy alone, you can have a 34% annualized return. Alright guys, if you enjoyed that, hit that thumbs up button, hit the subscribe button. I share a lot of amazing credit spreads trading videos with you. Again, grab this handbook down below because you do not want to miss out.